The banks are the ones that profit. Should you buy your own home to live in if you're planning on upgrading over 5 or 10 years anyway? You go out there today, you buy a house and you have a $750,000 mortgage with a 6.5% interest rate. Over the first 5 years of owning that property, you repay over $280,000 to the bank. But the big kicker is over $230,000 of that is interest repayments alone, and you've only decreased your debt by nearly $50,000. So after 5 years, you've paid down your loan less than $10,000 on average a year. Even further, after 10 years, you pay the bank almost $570,000. And over that time, you've paid over $450,000 to the bank and only paid just over $100,000 off your actual loan. Now, if that property doesn't increase in value over that 5 or 10 years, you've spent over $500,000 holding onto that property and you've only spent over $100,000 reducing your debt. Now, yes, over 10 years, you'd think your property would have increased in value, but if you can only afford to get into a market and buy an average or a asset like a 1 or 2 bedroom apartment that's going to cost you around $800,000 and you scrape in with your first home buyer deposits, this is probably a red flag and something you need to consider before just diving in, knowing that in 5 or 10 years, you're going to outgrow that home anyway, because it's going to leave you in a terrible financial position. You could consider rent vesting, where your rent is going to be a lot less than all those interest repayments, and you can accumulate a few properties along the journey, and in 5 or 10 years, they would have outperformed the property you buy as your first home. Then you can revisit, sell those down, buy your dream home with cash or with a big fat deposit. So before you go and buy, ask yourself, will you still be living there in 5 years? Will you still be living there in 10 years? Because over the long term, the banks win, you pay them interest, and you only decrease your debt by a little bit.